The future is bright for America, I like to say all the time. And then I see clips like this and I'm like, oh, no, it's not.
If you're driving 80 miles per hour, how long does it take for you to go 80 miles?
Like 2 hours? You're going 80 miles an hour?
Yeah.
We are doomed.
Hour and a half? Well, if you're going 80 miles an hour,
But
it's gonna take
how
more
long does
than
it
an hour
take
and
you
a
to
half.
get to 80?
Oh, you're right.
It takes you you have to like
Yeah,
build
so
up speed.
like 2 hours.
Like an hour 45.
Alright. Is that right? Do we get the money?
I think that was right.
There's a reason education sucks, and it's the same reason that it will never, ever, ever be fixed. It's never going to get any better. Don't look for it. Be happy with what you got. Because the owners of this country don't want that. I'm talking about the real owners now. The real owners, the big wealthy business interests that control things and make all the important decisions. Forget the politicians. The politicians are put there to give you the idea that you have freedom of choice. You don't. You have no choice. You have owners. They own you. They own everything. They own all the important land. They own and control the corporations. They've long since bought and paid for the Senate, the Congress, the state houses, the city halls. They got the judges in their back pockets. And they own all the big media companies, so they control just about all of the news and information you get to hear. They got you by the balls. They spend billions of dollars every year lobbying to get what they want. Well, we know what they want. They want more for themselves and less for everybody else. But I'll tell you what they don't want. They don't want a population of citizens capable of critical thinking. They don't want well-informed, well-educated people capable of critical thinking. They're not interested in that. That doesn't help them. That's against their interest. That's right. They don't want people who are smart enough to sit around the kitchen table and figure out how badly they're getting fucked by a system that threw them overboard 30 fucking years ago. They don't want that. You know what they want? They want obedient workers. Obedient workers. People who are just smart enough to run the machines and do the paperwork and just dumb enough to passively accept all these increasingly shittier jobs with the lower pay, the longer hours, the reduced benefits, the end of overtime, and the vanishing pension that disappears the minute you go to collect it. And now they're coming for your Social Security money. They want your fucking retirement money. They want it back so they can give it to their criminal friends on Wall Street. And you know something? They'll get it. They'll get it all from you sooner or later because they own this fucking place. It's a big club, and you ain't in it. You and I are not in the big club. And by the way, it's the same big club they use to beat you over the head with all day long when they tell you what to believe. All day long, beating you over the head in their media, telling you what to believe, what to think, and what to buy. The table is tilted, folks. The game is rigged. And nobody seems to notice. Nobody seems to care. Good, honest, hard-working people, white collar, blue collar, doesn't matter what color shirt you have on. Good, honest, hard-working people continue. These are people of modest means. Continue to elect these rich cocksuckers who don't give a fuck about them. They don't give a fuck about you. They don't give a fuck about you. They don't care about you at all. At all. At all. Yeah. You know? And nobody seems to notice. Nobody seems to care. That's what the owners count on. The fact that Americans will probably remain willfully ignorant of the big red, white, and blue dick that's being jammed up their assholes every day. Because the owners of this country know the truth. It's called the American dream, because you have to be asleep to believe it.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. The great George Carlin there in that clip. Guys, you have to understand you are owned. This game is rigged. The trading game is rigged. The investing game is rigged. The CPI is rigged. The government numbers on employment are all fake. They're all rigged. Understand what's happening in the economy to be able to survive and thrive in this market. Right now, we have the highest layoffs. January and February were the highest layoffs ever since the GFC, since January and February of 2009. Did you hear Powell say that in his testimony, his 2 days of testimony in front of Congress? Did he ever say that once? Lee, throw up the unemployment slide. Take a look at this slide. Highlight the recessions in red. You see the black wave? That's unemployment. When does unemployment go up? When the recession hits and after the recession. That is why we're matching the GFC numbers from 2009. All of this is starting to heat up. The way this works, the way this extended economic cycle is working, has to do with the way that we're fighting inflation. Powell did not raise rates high enough to crush inflation like Volcker did. Remember, we have the exact same inflation rate Volcker had in the early 1980s if you take today's CPI, as Larry Summers did, and measure it against the metrics from the early 1980s. And Volcker went to 20%. We went to 5.25%. This is why everything is more expensive. Everything is more expensive, and you see it in viral videos all over the internet. 44% of Americans cannot afford a $1,000 emergency. 44%. That survey was conducted by Bankrate. And you're seeing videos like this all over the internet. Lee, play that TikTok video.
Am I the only one that feels like they just can't do this anymore? I just got back from the grocery store. Let me show you what I bought. This is all I purchased. That's it. This is dinner for tonight, a few snacks for my kids they wanted, and dinner for them tomorrow night, the pizza. That's it. Some veggies. I didn't even buy the organic stuff. I bought the cheapest stuff. Bought stuff that was on sale. There's a few things I am picky about ingredients, such as the tomatoes, but that's it. Everything else was the least expensive stuff. Take a guess. Take a guess at what it costs. And you're probably wrong. $123. $123, that was with all my discounts for barely 2 nights of dinner. Barely 2 nights. I remember when I could spend about $120 and get groceries for a whole week, and that was breakfast, lunch, and dinner for all of us. And $123 is going to get me through the next 2 days. I can't do this much longer. Financially, I can't. I don't want to spend the money, but it's also just killing me. And I make decent money, so something's got to give here.
Guys, groceries are up 30% nationally, to the point where Biden is even out there now talking about shrinkflation. He's blaming it on the companies, saying they're reducing packaging to reduce the quantity. They're doing that because we're printing money at an unprecedented clip. Biden is adding $1 trillion in debt every 100 days. It's absolutely insane. The economic conditions, the financial conditions are the loosest they've ever been since prior to the first rate hike. That's why we have markets at an all-time high. But the way this recession is going to hit, because we didn't shock the system with really high interest rates, it's going to hit by hollowing out the consumer. The consumer is 70% of GDP. So right now, the consumer has over $1 trillion in debt on credit cards, an all-time high, $1 trillion. Why? Because they're using their credit cards to buy things they need, such as food, to survive and thrive. And this takes time. And that's why all you hear about on Bloomberg and CNBC is the strong and resilient consumer and soft landing. Claudia Sahm, you guys are familiar with the Sahm rule by now, the 3-month moving average on unemployment. She keeps going out of her way to say hasn't triggered yet. And even if it triggers, her forecast is for a soft landing. Now, the last 2 months, Claudia Sahm went on Bloomberg. I don't know. I saw her 3 or 4 times, and she went on CNBC saying it's going to be a soft landing. The rule that's been 100% accurate going all the way back to World War II isn't going to matter this time. And so I'm thinking to myself, why would somebody who has this rule that's 100% accurate about when unemployment triggers and you see that recession, why would she go out there and trash her own indicators? So I Googled her. It turns out she was on the economic team for Obama and Biden. She's a political hack. You have to understand the information you're fed is bullshit. It's all designed to lie to you. And why is Warren Buffett sitting on $170 billion with a B, an all-time high for Berkshire? Is that because he wants to miss out on Tom Lee's 3-year bull run? No, it's because Warren Buffett knows what's going to happen. But is Warren Buffett going to share that information with you? why he's sitting on $170 billion? No, he's not. Charlie Munger might have, but he passed away. Very few people, you can count them on your hand, will tell you the truth about what's coming in the economy. Your Jeremy Grantham, Scott Minerd, who just passed away, your Stan Druckenmillers. They'll tell you what they think's actually going to happen. Everybody else is trying to sell you something. That's the grift. I need you to invest in my fund so I can make my living off of your fees and invest your money for you. And even when they talk about the impending economic downturn, they all say the same thing. They don't say go to cash. Actually, they say cash is trash. What do they say? They say there's lots of things you can buy. You can buy defensives. You can buy. It's always buy. So when Powell was given that testimony, guys, and how many times have you seen this chart? Lee, throw up the New York Fed recession indicator. This is from the New York Fed. Did you hear Powell bring this up once in his testimony? Did you hear any of the politicians question him about this once? It shows the warning for a recession. We're at a 40-year high, higher, almost double what we were for the GFC. Remember, Y2K, no recession, soft landing from the Fed, from the government, from Wall Street. GFC, no recession, soft landing from the Fed, from the government, from Wall Street. Right now, no recession, soft landing from the Fed, the government, and Wall Street. And you are at a 40-year high on the recession warning indicator from the New York Fed. You're not going to hear about that on Bloomberg. You won't hear that anywhere in the media. They don't want to help you. You have to help yourself and understand the economic cycle. All of this is very perilous. The average person does not pay attention to as much financial media, say, as I do, as some of you do. The average person doesn't know any of this. And this is why bubbles are so absolutely devastating. This is why the average person doesn't really pay attention to politics until it starts affecting what they buy and their quality of living starts to erode. And you have to get 2 jobs, 3 jobs, or your spouse has to work that never had to work before. This is happening all across the country, which is why Biden has record low approval ratings at this term in his presidency in U.S. history, to the point where even commentators on the left have taken notice of inflation, even though every single person on Bloomberg, all the money managers they bring on, CNBC, MSNBC obviously is the worst, but CNBC, they all say the same mantra. You could play the tequila game, take a shot for every single time in an hour period. Somebody says to you, inflation's on a downward trajectory. We see a soft landing. Inflation's coming down. Tom Lee, inflation's on a glide path. Inflation, as a matter of fact, has not come down 1 month since we've had the inflation problem. Inflation has not come down 1 single month. The rate of it increasing from a high level has slowed down. Inflation has not come down. That would be deflation. We're trying to create disinflation, but even the commentators on the left side of the political aisle are noticing this. Lee, play Stephen A.
What about poor and desolate citizens here? How the hell do you print money for foreign countries, but you don't print that money to help eradicate folks that are starving right here in the streets of America, who were born and raised here? This is what I'm talking about. And so when you have something like that, what's the one way to eradicate it? Yes, you got to have a flourishing economy. Yes, you can't have inflation. Yes, you can't be on the verge of a recession. Milk don't need to cost $7. Bread don't need to cost $5. Don't get me started with how much sugar costs. You can talk about employment all you want to. You can talk about the labor participation rate. But guess what? If you ain't making no damn money and you got to get 2 jobs to pay the same prices or to buy the same amount of stuff that you used to buy, and the price is higher than it used to be because of inflation, then guess what? What are you really accomplishing? That's why Trump is on the verge of getting elected, reelected.
Stephen is a big time, ESPN host. He also has a podcast. He's a supporter or was a supporter of Biden. You heard him say he thinks Trump's going to win. And what did he do? He went on a rant about what everything costs. And that's what the average person notices. And guys, that's what's going to hollow out the consumer. And that's why the cycle's taking so long, because it takes longer to erode the spending efficacy, the spending ability of a large population of people. We didn't shock the markets. We didn't shock the economy with appropriate rate hikes. So we're in the strangulation method of a slow death. But you're going to see everything start to slow down. Unemployment at 3.9%. Again, record layoffs going back to the GFC. This is all going to keep moving forward and keep happening. The yield curve inversion and leading economic indicators, it's going to get progressively worse. Biden knows this. His economists, his economic team knows this. That's why they're printing $1 trillion every 100 days to try to keep the giant Ponzi afloat. So here's the catch, guys. Here's the rub. You make money trading long. You make money trading short. When I'm doing my investing, not financial advice, is when all of this comes back down, because how does this affect you as a trader? Not once in market history has the low ever been put in prior to a recession. Not once. So I trade on probabilities, just like in a poker game. When you think you have the advantage, you wait, you attack, you pounce, you utilize that advantage for the win. And that's what I'm going to do as well. I'm going to walk you guys through this as we go through this process in this economic cycle, because it's coming. I think what's going to happen tomorrow, if we get this hot CPI, the hot CPI is going to drop the markets, and then we could finally start to see that sell-off start to occur in the marketplace for this correction. That 8 to 10% move down is what we're looking for in the markets. That's what I want to see. We're going to go over the targets here in the video, and we're going to see this in the charts. And guys, you need to be ready mentally. You need to be ready physically, because a lot is going to change in this country, and nobody is going to help you. Nobody is going to tell you, whether it's out of ignorance or their own personal interests, but knowledge is power. Watch as much as you can of intelligent people talking about these previous cycles, because they all play out the same way. This time is never different. Be aware of the Ponzi salesman in the marketplace. Without further ado, Lee, let's start the show. All right, guys, if you enjoy this transmission, be sure to like and subscribe to the channel, because YouTube is not going to recommend this channel to anybody. So send it to your family and friends if you enjoy it. Guys, check out our sponsors. It supports the program. If you want to trade these markets, check out SimpleFX and BingX. The details will be pinned in the YouTube comments as well as the video description. Both of these sponsors will pay for your first month on our Discord. Message Lee in the Telegram for any questions you may have. Let's go ahead and start off. I want to talk about what I think is happening. So with the CPI coming tomorrow, guys, if the CPI is hot, which is predicted to be, by the way, so is the March CPI. And again, these predictions are coming from the Fed itself, then I'm looking for the start of this sell-off to start our corrective move. When we make that corrective move, this pull down of 8 to 10%, which is in line with the previous pull downs, that retracement, we shall see if we if we can build a base and move back up. That would be the move back up to the blow off top. What I want to do on these charts is look at what we have here. Massive bearish divergence. You guys know this on the daily charts over and over again. Momentum, MFI. Everything is massively bearish. So when we look at this, you still have your uptrends intact. This is why it's going to take a catalyst. This green line here on the E-mini for the S&P, 5163. That was the 1272 on the fib pull down from the all-time high to the market low, and that's what we struck. This is where we had a trade posted in the room as well in this area. Right now, price is 5106. So the big thing is, for a lot of people that don't want to necessarily trade but like to do some spot buying or investing, whatever, and they want to see where the market can go, let's look at the targets. So I'm going to take a fib, and pull this here up to the top. When we're looking at this impulsive leg here, the two main targets have not changed for me, guys. The two main targets remain the same. And I want to show you here, looking at this level here, okay, right on line with the 786. So now it's 48.41 with the new price action. 48.41 gives you this accumulation range if you can hold the top of that range, which means price would come down, right? Whether we sell off, pull back up, three-wave pattern, maybe get three waves to a bottom or something like that, and we start basing and then coming back up. This would be the shallow retracement option, 4,800 to 48.41. The deeper retracement option is going to be down here for me, which is that 4,600 to 4,650 range, which puts you back in line with your July highs. This would give you the measurement of this retracement, as Lee would say, the measurement of 11% on a drawdown. Okay, 11%. The 4,800 would give you 6.757%. So 7% to 10 to 11% is that retracement I'm looking for on the S&P. Obviously, if this was to reverse, if the inflation number came in low, it's not predicted to by the Fed, but if it came in low, the market gets more euphoric. 5193 is the fractal you have to flip. And then I'd be looking, obviously, you got to take out 5200, and then 5250 would be the area I'd be looking at to see if the market starts to stall. Understand, we are on a 25% up move in the S&P, a move so powerful in a weekly basis and a compressed time basis. 16 of the last 18 weeks prior to this week were up weeks, right? Or prior to last week were up weeks. That's only happened one other time in stock market history, 1971. 1972 saw the bubble burst of the Nifty 50 and a 66% decline in the S&P. But I still think it's too early for that massive decline. It could happen. We are in the month of the spring equinox. We have a total solar eclipse on April 8th. These are key pivot points in the market. Remember, the lunar eclipse on Halloween gave you the exact bottom for the October rally. So we have that pattern, that key pivot point coming up in a few weeks. That could be the sell-off. We bottom with that pivot point, then move back up, or this topping process could take long and then starts to break down. But I think this CPI is going to be a strong catalyst if it comes in hot as predicted for future further declines in the marketplace. And then we should base and then move back up for the blow off top. If we don't have any black swans hit like bank failures, all these different things are in this time of the season. It's the 1 year anniversary of SVB and New York SIG failing as well. March into April, guys. Black swans can happen. Be very well aware of that. But that's the pattern I see for right now. If we move forward, let's look at the baby S&P, the Dow. This is a very clean pattern. I think we're going to 36K on the Dow on this retracement. You're bouncing right off the 382. Price is 38,613 on the E-mini Dow. And what this does, the 1618, 36,042, puts you back in line with those previous highs from July as well. And this could form, all these patterns could form different patterns as they start to break down, but this could end up being a head and shoulders type pattern as well as it breaks down and declines to that 36K level. This would give you a retracement, by the way. Let's go ahead and measure this as well. So give you a retracement, probably 7%, something like that, 8%, 8.35. So this is an 8% retracement on the Dow. A shallower retracement would be almost 7%, okay, 6.5 to 7%. And right now, everything's just floating. It's all waiting on this CPI number. Remember that last big CPI dump that we had, the Dow fell 700 plus points. I think 800 points when it went into the next day. So just be aware of that. So if we get that hot number, you're going to be looking for future further breakdowns. What was interesting was the Dow did not break out and make a new high as the S&P and the NASDAQ broke out and made new highs. For that to happen, the Dow has to get above 39,343. I posted a trade that I was taking in the Discord, and that trade, I think, what was it, Friday? up here close to 39K. So we have this nice move down. I want to see further decline as we come down more with a hot CPI. And I'm going to be holding this trade, hopefully down to one of these two levels, 36.7 down to 36.042. If we get the hot CPI, if the market reacts the way I think it's going to react, which is a sell-off, and we see further breaking down in price. The best thing about being in profit on these trades ahead of key catalysts is there's zero risk. Stop loss can be at break even or in take profit levels. So there's zero risk for losing any money. So we'll see what happens with the Dow. Let me look at the indicators. They're all going to be the same. I show this every video. Massive bearish divergence on momentum. You can see your highs. Remember, all the highs and all the indices were back with the Santa Claus rally. All these legs up that they did are all massively bearish divergence, right? So you're going to give that back up in this retracement. And then we shall see, minus any black swans, if we get our basing process, the move up for the massive blow off top. And then the massive capitulation sell-off will follow that with the recession hitting, the reality of the recession hitting. Remember, the reality of the market being overpriced above 30 on the Shiller PE. It's only happened, I think, 6 times before. Every single time, and stock market history going back to 1929, when you've been above 30, you have had a crash sell-off. So just keep that in mind. Facts matter. Data matters in the marketplace. Moving forward, let's look at the E-mini NASDAQ, 17,961. The high that you did get to here on that last rally was 18,436. Looking at this on the E-mini, let's pull this fib, see where we're going. You guys are probably familiar with these numbers by now, but I'm looking at us to either return to what? This previous Wyckoff range, which is right here at 17,000 at the 786. That's if you can hold the top of the range, right? If you come down from that range, I'm looking at 16.2, basically 16K to 16.2, 17K to maybe, what is this, 16.7, somewhere in there. So these are the two key retracement levels on the NASDAQ for me, the NASDAQ 100. If we come down just to that highest level, 17K, 7.5%. You come down to that 16.2 to 16K, you're looking at 12% to 13% of a retracement. So those are the two levels I'm watching on the NASDAQ, guys. Obviously, to reverse this, CPI comes in cooler, flip, take out 18,436. If you watched my last video, I showed you the 1272 and we got within $40 of it on an $18,000 asset. And that's where all the markets started to reverse and have problems. So this is part of the topping phase, guys, the volatility, and volatility is where you make your money as a trader. Let's go ahead and look forward here on the Russell. I told you I didn't think the Russell would flip this 2100 level. We got above it, couldn't close above it, got above it, couldn't close above it, and you printed this beautiful 3-wave pattern, massive double top structure, right? You see that? So again, this will move with the rest of the market. Hot CPI, I predict this is coming down as well. If we take this fib retracement, remember the fib retracement on the impulse up was 1813 as my target. We look at it from this perspective, 1845, 1770. That's my range. You want to see if the Russell sells off with the market, comes back down into this range. This isn't all going to happen in a day. I mean, I guess it's possible. I don't expect it to. You want to see further declines, weakness. You might bounce up here at your neckline, maybe print another 3-wave pattern, start breaking back down, maybe base, and then you start coming back up, okay? It's going to take time for these movements, but this is my target range, 1845, 1770, in this range. If we do base for these blow-off tops, then you're looking at all these assets coming back up. And I'll be looking to take longs at that base level on these different indices. Let's talk about brother Bitcoin, because I gave you that 73 target to 80K, and it just keeps moving and inching closer to my target. Guys, you know, since October 23rd of 2023, my TA on Bitcoin has been bang on. For those of you that have been watching this channel, the diamond pattern breakout that I shared October 23rd for this massive move up. shared that on YouTube. Let's just look at the gains. It broke out that same day, by the way. Let's just look at the gains. This is 128% gain from that trade setup that I shared. But everybody says, I'm so bearish. You know what's funny is in trading, I was probably 80% long for 10 years prior to coming into 2021, guys. It's all about understanding the market cycle. So looking at 73.5, if we can break that and come up to the upside, let me add my other fib here. Let's get this fib on here. Again, 73.5, 79.2. So again, 73 to 80K is where I'm looking for that third top. I really like 73 because in market geometry terms, again, the previous all-time high to the second all-time high was a 6.5% increase. The second all-time high, if it comes up to 73.5, is a 6.5% increase. You're almost there. Remember, I was saying I thought Bitcoin was going to move up and make its top when the markets topped and started to decline. And that's how this has been working. I saw that as the mini cycle that was occurring, and that's what you're seeing. The key test for me is if we get this hot CPI and the markets do dump hardcore tomorrow, then what will Bitcoin do? We'll just start to top. We'll just do a soft pullback, start consolidating, and then try to make that move towards 80K. We shall see. This is going to be an interesting situation for Bitcoin, but as it inches closer to 73.5, watch and see if we get this topping action up here. And if we look at this on a 5-day chart, you're not even overbought on the MFI, right? You're not even overbought. I mean, from a technical perspective, the indicators are telling you have bullish momentum. You're not overbought on these larger time frames. This is why price keeps rising, the euphoria into the ETFs. But guys, just be aware, this is a parabolic ascension. When this tops, whether it's 73.5 or higher up, these numbers will change slightly. But remember, my two key targets that I have this coming down to on a shallower retracement, I have 78.9. So 48.9, which is 49K. And then I have this lower level target down here around 43 in this cluster of candles down here for Bitcoin to make its top, whether it does something like this, starts breaking down, makes some other patterns, but eventually coming down to either 49 or 43 in that range. And if we get the blow off tops in the market, then you could have Bitcoin coming up for a fourth all-time high, okay? You could. We don't know. We don't have candles, can't take projections yet, but that's what I'm looking at here in the marketplace. But if we're just going to do a fib projection, let's just say we think it does come down to 49K, right? The markets break down, Bitcoin finally stops moving up, comes down to that 49K level, which again this is a shallow, I mean, I know it looks big, but it's a shallow retracement for how parabolic this move is. And 49K is way up here at this fractal. Look at it. It's way up here. There's nothing really here. You have your high here, some clusters of candles over here. But let's just assume it does that. If you get that blow off top, and you can base around that 49K level, right? So again, I'm just going to draw this in big picture terms. Big three-wave pattern. You come down, you base, you pull back up, you start coming back up, you pull back, then I'm looking at 1618 at 87.5. Now, these numbers may not be impressive to many of you who are looking at 250K videos, 500K videos, 1 million videos, but guys, I deal in realism. I deal in Fibonacci proportionality because these movements have been highly accurate. My trades have allowed me to retire with Fibonacci in this marketplace, specifically with Bitcoin over here on our 48.2 trade. Our 48.2 trade, 75% drop. Share that on YouTube, okay? So this is what I'm looking at. If you get the blow off top move, we'll see. Could it not go to the 2618? Sure it could. That's 111,000. It's possible. We have to see how the market reacts. We have to see what the economic conditions are. But first we got to see a top, and then we got to see a drop, and then we got to see a basing process. So it all takes time. Let's move forward to Solana. Solana's been hitting our targets, tracking very accurately. The 1618 is at 156. If we can get up there, we hit 152, almost 153. We'll see if we can get up there, or if you start rolling over here, forming a top as Bitcoin gets to that 73.5 level. We've got to wait and see, guys. Again, looking on the larger time frames on the 3-day chart, want to see some type of pattern form, something that we can trade, whether it's a pullback, give us a W pattern. wick out up here, start retracing. We have to see some type of pattern that we can trade. And I'm not even looking for trades until Bitcoin stops moving up. Once it starts moving up, we'll drill down into the smaller time frames so we can start looking at some of these trade setups. On Ethereum, we pull our fib from the all-time high to the market low. You're right at the 786. Another Ethereum target's been hit. 4,013. You're at 4,031 right now. We'll see how high this can go. I have a feeling it's getting close to its top here as Bitcoin approaches close to its top. Let's go ahead and throw the 886 on here as well, just because it's the next level up that we can see. Get a price idea, 4,400. Okay. So if you can keep moving up, I'm looking for this to top here though, between 4,000 and 4,400. I'm going to see some type of structure right in line with this previous all-time high, all this resistance. I think we're going to see some type of structure here. This is a 5-day chart. Overbought basically on the weekly time frame. Momentum's still good. Doesn't mean you can't pull up higher, but again, to be used in confluence with Bitcoin. When Bitcoin stops moving, we'll drill into some smaller time frames. Let's go international. Looking at the DAX was up here at 17,924. You're at 17,730. This moves quite easily or tracks quite well in parallel with the Dow. You're having a lot of resistance at 17,821. Okay. If the markets start to break down tomorrow, I expect the European markets to also sell off with them. Immediate resistance above you, 18,043. But right now you're still below the 17,821. So we'll be watching that because I think everything's going to be hovering today, waiting for the all-important number tomorrow. If we look at the Euro Stocks 50, the 50 big blue chips, let's get our fib projection. I gave you this number before, 4,999. We got to 4,995 and 4,996 within $3 of this asset, right? A $5,000 asset. And now you're at 4,927. So 4,999 remains your key resistance level. Let's go ahead and look at this since we did hit our target. Let's go ahead at least down to a daily, see what we're doing. This is when I start looking for these 3-wave patterns to form double tops because you get your initial sell-off. There you go in an 8-hour time frame. And then you'll get some type of move back up like this 3-wave pattern, right? You get some type of move. The hot inflation number, you can see the European markets move down as well. If you're looking to track this, you can take a fib from your high, pull it down. If this is the low, it's the low for right now. And then I'm looking at my 618 and 786. Let's look at it this way. 618, 4,964, 786, 4,978. So for those of you that kind of got lost here, looking at a 3-wave pattern to possibly come up and do this type of pattern and start breaking down with the US markets with a hot CPI. Let's look at the Japanese market, guys. We talked about this for a couple of weeks. 40,000 gave you that key psychological number, and you've had a massive sell-off since then. You're at 38,285. So this is the range you're in. This is all due to the Bank of Japan, which may be finally switching from negative interest rates. So the big move is they may go to 0 or they may go to 0.25% on a positive interest rate, and the yen is strengthening. The Nick 225 did not like this move at all. Trying to hold support here at 38,330, just below. This is going to give us some type of shape here in the future. It gave us a double top on a smaller time frame that we can trade, whether this comes back up, fails again. But all this is going to be driven again by external catalysts. What does the Bank of Japan do? Tune in and we will keep track. Guys, I'll see you on the next transmission. Look for the CPI tomorrow, 8:30 a.m. Eastern. It's going to be interesting and a big catalyst for the markets. I'll answer your comments and questions as always. Take care, everybody.